reverse mortgages. This is a product most financial advisors will tell you you are making a terrible mistake if you were to get this. Let's dive into some of the pros and cons of this product and maybe explain why most people shouldn't get it, but some people should. If you're new to my channel, my name is Koukun and I run a real estate team and I work as a mortgage broker. If you're interested in learning a bit more about what we do, check out some of the links in the description. And if you're interested in a quick call to discuss your situation, my appointment Calendly link is in the description below. All right, so let's get into it. So a reverse mortgage is a mortgage that typically goes up to anywhere from 30 to 40% of the value of your property. So it really only applies if you have a significant down payment or if you simply own a house outright and you're looking to take some of that money out in order to use it for something. The real benefit of a reverse mortgage is that they are very flexible when it comes to sort of proof of income. You don't need a lot of income to get this product simply because there are no payments. The interest accrues so that you start with a mortgage of 30 or 40% of the value of your home, and that mortgage simply goes up by the interest each year. At the end of the 5-year term, you are actually left with a larger mortgage than you started with. And most reverse mortgage companies guarantee that based on their calculations, the mortgage should never exceed the value of the home over time or over a reasonable period where you will be alive. So this is a product that is geared towards those who are typically 55 years of age and older. And the older you are, they are typically willing to give you a higher loan to value, meaning what percentage of the house you can get a mortgage for. Now, not having payments can be a huge benefit, especially to those who are on a fixed income. For example, if you bought a home in Toronto 30 years ago, you paid it off, but you don't have a lot of savings and you don't have a pension income, you're really relying on, CPP, old age security, GIS, right? If that government benefit is not a significant income, it can be tough to qualify to borrow money against your home. And even if you do borrow money against your home, where are you going to get the money to actually make the payments? You may have to borrow to pay the interest each and every month, which is a bit of an inconvenient process. The benefit of a reverse mortgage, you're able to take that money out. You don't need to make payments. You lose a little bit of your equity each year because the interest accrues. And either if you sell the property, you pass away, or you move into a retirement home, at those points, typically you will have to pay back the reverse mortgage. And typically that's by selling the property. So let me share a story. One of our clients, reached out to us. He wanted to purchase a home. He was living in a retirement home and he, just wanted to have his own place that he could work on. And in his situation, basically, he wouldn't qualify for any mortgage from almost any lender. Even the lenders that were more flexible, like B lenders, didn't really see a fit with him because he was 83 years old and they weren't comfortable with knowing that, hey, in a couple of years, he may pass away and then they have to deal with this property and the estate and all of that. Reverse mortgages and reverse mortgage providers are built for that type of client because they have a lot of those clients. They know the process, what to do if a client passes away and how to sort of go through that process. So they had no problem. They didn't even need him to have a good credit score. They didn't need, a lot of income. Basically, they need you to have enough income to pay your property taxes, pay your utilities, and just, cover your house expenses other than the mortgage because there is no mortgage payment. So in his situation, he put a fairly large down payment, over half of the purchase price, and he was able to get a mortgage for the rest. And the nice part is now he's actually saving money every month. He's not paying the high cost of living in a retirement home. He gets to live in a home where he only pays the property taxes and utilities. And, he has to be able to take care of himself. That was a consideration in this, but, he's in good shape and he was excited to get his own home. Believe it or not, he actually wants to renovate the home himself. I don't know if that's something I would recommend to everyone who's in their 80s, but hey, everyone has the right to do what they want. So it really helped him out in this case, and he's going to be purchasing that home shortly here. So that is an example of where a reverse mortgage may be a good fit. Now, one of the key considerations that I specifically asked this client is, do you have someone you're hoping to leave a large inheritance to? Because obviously he's putting his money into this property as a down payment. Like, even though he doesn't lose that, it is in the house may go up in value, and the reverse mortgage provider doesn't get the house. That is a common misconception. They only charge the interest each and every year, same as your regular bank. And their interest rates, while it is higher than typical A lending mortgage, it may maybe 1 or 2% higher, it's in line with a B lending mortgage. So B lenders are lenders that work with people who don't quite fit that typical box of what an A lender requires. So if you're self-employed or if you don't have a consistent income, you may have to go to a B lender anyways. So if you're comfortable paying B lender interest rates, it is pretty much in line and there's no lender fees. So you don't have to pay 1% or 1.5% of the purchase price in a lender fee that you would if you go to a typical B lender. In this client situation, he was okay with, the interest accruing over time, having the additional cash flow every month from his pension income, and him being able to simply use it for what he wants instead of paying this fairly large retirement home cost was a nice benefit to have. And, he could enjoy it, he could spend it without worrying that at some point in the future, he will need to pay rent or a mortgage payment. Basically for life, while he lives in this home, he will never need to make a mortgage payment. The curious part is also with reverse mortgages, you can actually refinance your home. So in this client's case, he wants to do some renovations and upgrades to the home that he purchased. Once he completes them, we can actually go through the refinance process with the lender. And for example, say if the home is worth, 100 grand more, he may be able to get a good portion of that increase back in cash. And again, once the mortgage has increased, it is still a reverse mortgage, so there's no payments. So whatever he gets out, that's money that he can use to spend without having to worry about making payments either now or in the future. Now, who should not use a reverse mortgage? Typically, if you have someone you want to leave a nest egg to, when you pass away, you want them to be taken care of. You want to be aware that, yes, you don't make payments while you are alive, but for example, if you have kids or grandkids and you want this money to go to them and take care of them, then you're going to be chipping away at that nest egg by taking a reverse mortgage out. And finally, if you qualify for a traditional mortgage, if you can make your mortgage payments and you can get the lower interest rate, that is very well a decent option as well. There's no reason to go to a reverse mortgage simply because there's no payments, because there is still interest, right? So if you have a stable income in retirement from the pension side of things, you have good credit, you can get access to a typical lender, I think that is still a decent option to go for instead of a reverse mortgage. But if you're in that sort of group of people where you have a large amount of equity or a paid off home and the home is really worth something, because I know people in Toronto who've lived in homes for 30 years that are worth $1 million, $1.5 million, but they're not necessarily wealthy individuals. Yes, they have equity in this home, but they may be living off of, $1,000, $1,500 a month from, the CPP, old age security and GIS. And that's how they survive day to day. So if you're in that situation, you love the home you live in, you don't want to sell the home and go rent a place, but you don't really benefit from the money in this house. And, if taking out a portion in a reverse mortgage still leaves you a nest egg to leave your children, it is something to consider as an option to enjoy a bit of the equity you have now instead of, saving it all for when you pass away and giving it to your kids or grandkids. Again, it's a real matter of priorities. You have to decide what is truly important to you. And this is an option for those of you that may be in that unique situation. Hope you found this video helpful. If you have any questions, feel free to leave a comment below. And again, the link to my calendar is in the description if you'd like to book a 15-minute call to discuss your situation. All the best.